Well, hi, I'm Suzy Taherian. I've been an adjunct professor at UC Davis Graduate School of Management for the last 9 years, I think, teaching international finance and international business. But my day job has been CFO of various international companies, mostly industrial area, manufacturing, engineering, construction type companies. And most recently, I was CFO of a company called Kinetics, which I stepped down in December. And I recently started writing articles for Forbes and wrote an article about a resilient MBA and how MBAs are more suited. This cohort of MBAs has some advantages going into this crisis.
Suzy, thank you very much for being with us. And again, thank you for this great article, which is very much timely at a time where many people are asking, should I consider going for an MBA? But I'd love for you to tell us a little bit how are you doing and with your contacts that you have on a daily basis and regularly with MBA, how do you see the MBA population in general?
Yeah, it's interesting because I've been teaching for the last 9 years, so it's been interesting to watch and see how the MBAs have evolved over that period of time. A few observations. The MBAs have always been ahead of the curve on technology and working virtually, working online, sharing, connecting online. I think it's partially because they're a younger generation. The average MBA is about 27. And partially because, certainly for UC Davis, we're based in Silicon Valley, so a lot of these folks have been working with technology companies or startups or have friends who are in that sector, so are very, very familiar with technology that makes connection and virtual work easier. So that's something I've observed over the last 9 years is students have become more and more tech savvy. I called eye intelligence, ability with iPad, iPhone, Android, whatever, to connect and basically get work done, study, whatever they need to do. They've also been, this might be partially Davis, but I think it's also a sign of the times, a much more socially conscious group, much more politically aware and active, much more holistic in their thinking about business issues, not so much just maximizing for shareholder return or bottom line or a single financial metric, but looking to optimize the return for all the key stakeholders. How does this impact the environment? How does this impact the community? What does this mean as far as the employees? Is this fair to the suppliers? So much more multidimensional in their thinking about all the stakeholders for a business. So it's been interesting to see how this group of MBAs has changed over time, but also how they are more forward-thinking and, frankly, at this point, better equipped to deal with some of the issues that are coming up in this crisis.
Thank you. So my next question is actually, I have a two-part question, and it's related to risk, which is very much, timely. The first part of my question is, what are you teaching MBA students to help them identify risk and adapt to the online atmosphere? And the second part of my question is, do you believe that MBA programs will bring more risk-related classes in the future, as we have seen many leaders at the political level and within the economic ecosystem were ill-prepared for what happened?
Yes, we have been teaching risk in our classes for quite a while. For international finance and international business, for example, we use a tool called tornado analysis, where we look at a particular business opportunity and look to see all the key risks and uncertainties that could impact it, both positive and negative. Tax rates could change, technology could change, there's political risk, foreign exchange risk. So we look at those different risks, and then students quantify those risks and look for risk mitigation strategies. So that's been part of our curriculum to help them understand and quantify, identify risk, and how to mitigate it. And that also enables them to build business models that are more robust in times of crisis or change, because they've already planned for risks and thought through of how they need to pivot or adjust strategies to respond to it. So that's one of the tools we use. So I think, and that's in all the different curriculum on the supply chain side, on lean manufacturing, on dynamic pricing. It comes into all our curriculum in understanding the uncertainty of the business environment and how for them to build businesses that are more resilient. And I absolutely agree that going forward, all companies and all executives will be much more risk conscious. We're seeing it already. There's a lot more awareness of insurance. There's a lot more focus on risk mitigation strategies as a core part of operations. Used to be that insurance was something that happened sort of an administrative role in the backdrop. It's becoming very much center stage, and all companies now have a risk strategy. They all have contingency plans. They all have business continuity plans. And I think going forward, because we've seen what has happened in this sort of black swan, unprecedented risk has happened, everyone is just more sensitive to it, and also the importance of having strategies to cope with it.
Thank you. My next question actually is related to, how MBAs are prepared like for the virtual environment. And maybe we could ask, Amanda Opperman, who is with us, who is the, Assistant Dean of like Student Service, maybe to bring like some comments into the question. But the question is, how are MBA already prepared for virtual learning environment? And how does that translate into the white collar job? And I think that what will be very interesting in this question is look at your perspective as a professional and also like as a professor, and also maybe have, Amanda's perspective on, how schools are like actually preparing for this virtual and online, curriculum that we're going to have like the next few months.
This has been interesting. We've been talking for a long time about the digital divide, the divide between people who have technology and access to it and are digitally savvy, have broadband internet at home, and people who don't have access to it or don't have access to a laptop at home. And that divide is becoming an absolute chasm during this crisis. And I've seen this in the professional environment. When I was CFO of Kinetics, we're a large global industrial engineering construction company. The folks that worked in the offices, and these are the jobs that most of our MBAs would aspire to: marketing strategy, recruiting, financial analysis, risk mitigation strategy, treasury banking, shareholder relations, management consulting. All these type of functions, those could be done remotely and virtually, online, by email, through a variety of connectivity tools. The blue collar jobs, the folks that were at the job site doing actual construction, of course, that can't be done virtually. And you see that their lack of access to technology or their inability to use technology limits their job options and their salary and professional progression. So this is an advantage that MBAs have, because most of the jobs they are looking into can be done online and virtually, and they can bring a tremendous amount of skills and value add to it because of that ability.
If I think just from the student services side of my role, and I think about our current students, they had to very quickly, with no warning, just adjust and adapt. The same with our staff and with our faculty. So in, a period of 10 days, we took our entire school and made it a virtual school. And everybody had their own unique way of how that was a real adjustment. And then in the student requests or the student concerns I've received since that time, it's really obvious to me that there are certain students who are having trouble, not really that it's going virtual, but they're having trouble with something changing so quickly and so abruptly. And that's something that's interesting if we think about, okay, how would those students do after they graduate and they're in the workforce? Because every one of us who's a staff or faculty member, we are workforce, and what we felt trying to transition in those 10 days was just massive. So it can be something that when I put my admissions part of my job hat on, maybe we want to be asking some different questions during the admissions interview, or having some different essays in the application, because we want to think about how would they respond, or how have they responded to really quick and abrupt change, because that would indicate how they could survive in the program or how they might excel when they graduate. And that's something we would want to know about them.
What's interesting for me is for the international business class, we actually take the class to a different country. So part of it, of course, it gives the students that international experience, which I think is another point of resiliency. But also, you see the technology part playing into it. You know, students were arranging meetings in Japan with language barrier, distance barrier. They were using technology and internet. They were scheduling meetings and events in Ireland. They were making payments for things online. And they were very comfortable with that. Very comfortable, and it was very easy and very familiar. And in fact, a lot of times they came to me with tools and said, oh, Suzy, you know, the phone doesn't work very well there, but we could use WhatsApp, or we could use Venmo, or we could use this other tool. Or we could video conference a speaker who can't come in class in person. So they've access to tools, technology to work internationally, online, virtually, is amazing.
Suzy, you mentioned rubric thinking in your article. Tricia Wang brought the ideas of thick data, the human aspect, to big data in one of her TED Talks back in March 2018. In today's environment, most forecasting models are proven wrong due to the current disruption. How do you believe MBA can influence even more the human factor in the economy?
And this is one of the great advantages the current cohort of MBAs has. This is an incredibly socially conscious, politically aware, virtually connected group of individuals. By the rubrics thinking, what we meant was that it's a multidimensional thinking. So MBAs very naturally don't optimize around one variable, such as NPV or shareholder return or cash flow or impact on the bottom line. They look at multiple variables and try to come up with the optimal solution, which is holistic. What does this mean for the environment? Is this a good solution or business model for the employees? How does this impact our suppliers and the communities we are involved in? So this multidimensional thinking that they bring to it, I think, is very, very powerful and became really obvious in today's crisis, where we are doing the trade-off between solving for the healthcare crisis versus bringing the economy back online more quickly. And these trade-offs, these multidimensional thinking is how MBAs have been approaching questions for years now. What that means is they factor that into their risk analysis, but they also factor that into the way they forecast or do analysis, in factoring in the costs and not just meeting the bare minimum of minimum wage laws, but what is the best interest of community, not just meeting the bare minimum of environmental laws, but what is a really appropriate, sustainable strategy that means a good long-term reputation for this company. Trade-off between having their lowest cost product and a high-quality product that will build a very positive reputation and have a very positive brand value in the long term. So we'll see that thinking translate into the economic and financial analysis they do as well, and hopefully result in companies that are more financially robust, but also better citizens, global citizens.
There are some industries like engineering and law where we see a lot of folks come in and say, oh, I'd like an MBA even though I have a graduate degree in engineering, or even though I have my law degree, because they get that most problems can be solved with business strategies. So those industries, they kind of already get it. And what I'm wondering is, from your point of view, everything that's going on now, can you see other industries that may start to follow along and realize, I need to couple this technical expertise with an MBA because that's what's going to make me resilient in the future?
Yeah, that's a great point. And we're seeing it already. You know, in our classrooms, I'm seeing doctors, lawyers, people with PhDs in science and technology. A lot of our students have masters in engineering. And the average student has a lot more work experience. People are realizing later in their career, I'm really missing the MBA perspective of this. So the richness of that is they're bringing that experience with them to the classroom. And I think that's helping the multidimensional perspective of it, but also they have learned and they have some scars, and that they bring that to it as well. But I absolutely agree. I think people are seeing that they had a very strong technical foundation in the field, but they're missing the business What's dynamic pricing? What's a good marketing strategy? What's a good way to build a culture? What is organizational behavior? What's a good way to communicate a strategy? What does it mean to have a good strategy? So I think you'll see that a lot. And that's why also we're seeing a lot of the folks coming into the MBA programs are folks with very strong technical background in another area that really want this additional dimension to it.
Why must UC Davis MBA students think multidimensionally when tackling a complex and changing economy during the COVID-19 pandemic?
Yeah, it's interesting because, like I said, our MBAs were thinking that way. And it's interesting, I would see them challenging me in class when we would talk about analyzing a problem, and we would focus on the financial side. They'd say, but what about the human side? And then we'd find a way to factor that into the financial analysis. But what has happened in the larger world is we're also seeing businesses and corporate leaders stepping back and saying, we need to rethink the model of shareholder return is the only metric. We're seeing folks like BlackRock, which is one of the world's largest asset managers, saying it should also be important about environmental sustainability. We're seeing people like Goldman Sachs saying, we're not going to take company public unless it has a diverse board. We're seeing environmental metrics, diversity metrics, sustainability metrics show up into very financial environment. The European Central Bank is including environmental metrics in their lending decisions. I think that a corporate business responsibility group came back and said, hey, we largest companies in US are rethinking what the key goals of a business should be. Yes, sure, it should make a profit, and yes, it should return money to its shareholders, but it should also consider these other things almost on equal footing. So I think the global business community is really appreciating the importance of a multidimensional thinking. And it's showing up in some very financially driven, quantitatively driven, where you'd think this has not been a topic of conversation in the past.
In your article, you mentioned what has been true for the past 15, 20 years about the globalization of programs, and that today students think beyond borders. What do you believe will happen post-COVID-19 when some are calling for thinking more local versus thinking global, as the global supply chain was disrupted during the pandemic?
Yeah, that's a great question. We've seen globalization has been a constant trend for the last 200 years. In times of peace, people tend to trade more because both parties mutually benefit from it, and that has helped economies grow. However, we also see in times of war that globalization takes a step back, right? When people are at war with each other, they're not trading. And we were already on certain nationalistic trends. We were already seeing tariff trade wars all around the world between US and China, between US and Europe. And we were seeing sort of nationalistic activities and a little bit more focused on local supply chain, local hiring, showing up on the global stage. This crisis is going to exacerbate that. People are going to be uncomfortable, at least for a short period of time, of having importing or exporting from other countries, which have been hit by the virus. Supply chains are disrupted. Factories may not be running and not be able to provide for some time. And so companies are going to shift to having a more local strategy with suppliers and customers near them, so they can assure that in case of another disruption, they will be able to continue their business. So I think a lot of companies will build backup supply chains. In the past, most people had the supply chain where it was the lowest, cheapest supplier. And sometimes they'd have a backup supplier, but both those suppliers would be in the same country. Now I think they'll shift to having multiple suppliers and possibly having even more expensive suppliers, but closer to home in their own backyard, where there's the additional cost of the suppliers offset by the lower risk in case of a disruption. So I think in the short run, we'll see a bit of a step back for globalization. We'll see folks looking for more local, more within their own national boundaries, and even more local than that within the state or within a short drive away, as there's some problems with airplane transportation. As a very short run, I think in the long run, globalization will continue as a trend going forward. But in the short run, for sure, we'll see, especially for risk mitigation strategies, people having diversification of suppliers and customers and employees and closer to home.
In your article, you mentioned the resiliency of the MBAs and what great things can MBAs do, especially in the current environment and for the overall economy. In today's environment, we see more and more students or prospective students looking to go to like specialized master or 1-year program. Why do you think, how would you advise, if you had, let's say, the daughter or son of a friend who comes to you and says, Suzy, I don't know if I want to do like a master in finance or an MBA. What would you give her as advice or him as advice?
That's an interesting question. And by the way, I've been advising family and friends to do that because some of them are saying, hey, in the near term, there's a big unemployment and I've been laid off. And I think that might be actually a great time to go back to business school and retool and add some additional tools. So when the economy does start up again, they're very well positioned for that future eventuality. It depends a little bit on people's perspective of their own personal strengths. I think some people that have a lot of strengths in financial analysis are very strong in that area. The master in accounting and the master in financial analysis is fantastic. There's going to be tremendous need always for great analysts. There's more and more data being collected and we're gleaning more information and insights from that. So people with that background and capability will have a lot of opportunities. Conversely, if there's people who are better at management, at coaching and mentoring, at building relationship, at business development and sales, then the general MBA, I think, would be great for them because it gives them that rounded skill set and opportunities. Mm-hmm. One thing I wanted to add, we're talking about global versus local, and I mentioned the short term, it's probably a little bit more local looking than global. But I do want to mention the long term, I think globalization is still a trend. And this is where the MBAs have an advantage because they've been going on study abroad programs, they've been interacting with classmates or international students, they've been having more case studies that are international, they've been traveling more. So they have a lot more national perspective. In an average class, when I asked the students how many of them have traveled overseas or worked overseas, because even if they're working for a US-based company, maybe some of their work is outsourced to other parts of the world. So they're on the phones with colleagues in other parts of the world. And this is going to be a really important skill set when we come out of this and are trying to rebuild that global fabric. It's gotten really frayed because of Corona and because of some of the trade wars that were going on before. So having had a classmate in class sitting next to you that is now working and has responsibility overseas, having that personal connection or having had the opportunity to go visit and work or study in another country, and now they've got a relationship that they can turn to if they want a supplier in that country, I think the MBAs will have a huge advantage of building on these international relationships and experiences because we're going to have to rebuild our global fabric. So I think that's an advantage.
Could there be a strategic advantage to intentionally being more aggressive when everyone else around you is being more conservative? Like, are there examples of that in the past and when we've seen similar things happen in the economy? Or if you were advising a company and they were trying to decide what to do, like, would you ever advise, oh yeah, be more aggressive right now because of XYZ?
One behavior that we study in finance is home bias. And this has been quantitatively shown that people have a bias towards what's familiar. What we don't know is scarier than what we know, right? For someone who's lived in California, earthquakes don't seem scary, but we're terrified of hurricanes. People who live in Texas who've had hurricanes don't think they're much to think about, but they're terrified of earthquakes in California. So there's a home bias. And the way it shows up in finance is investing. So we saw historically that venture capitalists tended to invest in Bay Area within a 60-mile radius because they could go visit those entrepreneurs and they probably knew those entrepreneurs or knew people who knew them. So there was a strong home bias. So most of the venture capital money in Silicon Valley was invested in companies that were in Silicon Valley. But to your exact point, after a while, people realized, well, this is a disadvantage because the valuation of companies in Silicon Valley went up too high, unrealistically high. Meanwhile, there was a great startup in North Dakota or in Kansas City or in Ohio that wasn't getting funded. So venture capitalists started to reach out beyond the borders of Silicon Valley because they realized there's a lot of great opportunities, and we're all chasing the same few here in Bay Area and overbidding the prices. And I talked to venture capitalists recently, and I said, now with coronavirus, are you going to retrench and have this home bias behavior and just invest in companies in Bay Area again, because you can't get on a plane right now and go visit those companies in Nebraska or Ohio? They said, no, Suzy, we are still very cognizant that great entrepreneurship and innovation is coming up everywhere in the world. And especially if it's a tech company where we can virtually do a lot of the due diligence and get to talk to them and connect with them, we're going to look for them because we know that they're better opportunities. So exactly to your point, Amanda, they're realizing that if they sort of retrench and focus in their small geographic area, they're missing out on a lot of better opportunities and paying too much for it. So I think in the short run, there'll be a little bit of a home bias. There's a little bit of retrenching, but they're already they're thinking we can't limit ourselves to their home backyard market because the opportunities are elsewhere, and this is a great time for them to find them.
You know, Suzy, from your perspective as a professor who's been studying business and advising companies, and then Antoine, your experience in career development, but also your previous experience in the financial sector. So I hear a lot of folks trying to compare this to 2008, compare it to 2008. In what ways is it different or the same as what happened back then from your perspective?
Living through a crisis is great training or living through another crisis. This is why EMTs and emergency doctors are so good, because they are so trained into being emergency crisis mode. So if a patient comes in with a whole different emergency, they know how to respond. So that's the advantage of it. I think it puts you in this, okay, how do I quickly make decisions? What leadership means in times of crisis? How do I do a quick triage to understand where is the most impact? What are my critical few resources? So it gives you a mindset, which is really helpful. How it's different, though, is that crisis, in hindsight, was much more limited in scope than this one. This one is completely global, impacting every industry, every sector, which makes it more difficult. You can't say, well, we had an earthquake in California, so we can bring resources from Texas to help with it, because Texas is also hit. And so is China, so is Italy, so is Europe. So it's much more global, much more widespread. And we have two crises in this particular case. We have the healthcare crisis, and there's a way to respond to that. And then we have the economic crisis, and there's a different response to that. So this one, I think, is unprecedented in scope and scale and severity. But there was a lot of lessons we can apply from that one. So there's a bit of an advantage for folks who have lived through that, because they bring some of the learnings from that one to this one. And hopefully some of the government reaction to it was also lessons learned from the prior crisis. I think governments are going to lean in more quickly than they did in the 2008, where they thought the problem would solve itself, and they saw that it did not.
Yeah. And again, I agree 100% with what Suzy said. One big difference also between the 2008 crisis and this one is here today it's affecting also like all the small businesses, like small businesses like restaurant, like retail shop, and sometimes we have a tendency to forget that the majority of people are employed like in small businesses. So anytime you have like a small business, that is affected, it affects also other parts of the economy. Like it's, what economists call, the multiplier effect. And in this crisis today, the way it has, impacted like small business has been dramatic compared to 2008. 2008, as Suzy mentioned, it was like certain part of the economy that were affected, like the car industry was infected, the finance industry was impacted, not infected, but impacted. But it was not the whole economy that had to suffer. Here we have like small businesses that are closed and are going to be closed for another maybe 2-3 months. So the recovery process is also going to be very different. In your article in Forbes, Suzy, you are speaking about yoga flexibility and giving like an example with the Dean Unaver, like in one of his classes he teaches, like the marketing classes. We hear more and more about, agility in the general business, and we're trying to teach more and more our students to be, agile, because, you need to adapt to situations. I'd love if you could, maybe develop that a little bit more and maybe provide like some sound advice, for MBA students and maybe like the population in general. How do you see this yoga flexibility and, being agile be so important in today's environment?
Yeah, that's a great one. It's interesting because we look at a lot of risk mitigation strategies, and a lot of it is keeping optionality and keeping flexibility. And so, for example, in the finance class, we'll talk about how to protect yourself against foreign exchange risk. And we talk about some traditional tools like buying a future contract or buying an option or derivative. But we also talk about, for example, if your risk is for a supplier in India, and if the Indian rupee got more expensive, then your supply cost goes up. So one way is to get the foreign exchange risk protection. The other way is to diversify your supplier and have multiple suppliers, not just one in India, but one in China, one in Bangladesh, and Vietnam, and Mexico, Brazil. So we talk about strategies, core operational strategies that help a company be agile. We talk about, for example, on pricing risk. So if you have one customer that's unable to pay or has a shift in culture or mindset and doesn't want to pay the same pricing, what are the strategies to mitigate that? And there's lots of ways to mitigate that, but one of them is to have a very differentiated product. If you have a very differentiated product, the customer is not going to be so price sensitive, right? Because they don't have too many other choices of where else to go, and they see the value that your product adds. So they're more likely to stay with it, even if the price is slightly higher than another lower cost option, which is not as good. So having a differentiated product, for example, becomes a strategy and tool for mitigating some of that risk. So we talk a lot about being agile and being able to pivot and change in the classroom discussions, and students come up with examples and reactions of how they've seen it. The other thing we do is we actually have students do actual cases. So they go, and we have at GSM, we have the Impact Project, where we partner students with actual companies solving real life problems, and they see it. Here's a real life problem, and so take the theories in the class that sound good, then they try to apply to a real company, and that I think helps them be agile, to see the solutions in a real life situation. For all the classes I teach, I also require students to do a project presentation. Give me an example of a company or a project or a product that you'd like to bring to market, and give me a pitch on that. And so they get really good at thinking on their feet. They're coming up with business models, looking for where the need is and how the market may have shifted. So I think we give them a lot of different tools and experiences to help them be more agile in their thinking.
It's not like we have like a one-to-one correlation to something in our past that could have really prepared us for this. But I am curious, what things from your past, whether it's a case or a study or a consultation project, like what things are you drawing from right now that have some relevance to what's happening today?
So I have the disadvantage or advantage of having had a lot of crises in my life. So I'm originally from Iran, and I grew up during the Iranian Revolution. So this is very familiar in a way, because there was food shortages, schools were closed, communications were shut down. The disadvantage I had was there was no internet and there was no Netflix. So we were pretty bored sitting at home waiting for schools to open, and we had power outages. And so I lived through that crisis. And then there was a war in Iran, so I lived through a war and all that comes with it, and people dying and unexpected and uncertainty of that. And then I came to US, and in the business world, of course, I was working in 2008, trying to put together global business plans for Chevron's lubricants division. Motor oil business for Chevron is about $4 billion a year, it was at that time, over 100 countries. And when the market crashed, our sales went down about 20%, which is a huge amount in just a matter of a couple of months. And trying to put together business plan and budgets, and it was all across the world, so to give us a very global perspective. so that was a really tough experience of how a global company manages through a crisis mode. So it was a good experience for this. And then since then, I've been CFO of some startups. And the thing about startups is they're not very resilient. They're small by definition. They're early stage. They may not have a diversification of products or customers. They might have one really good product, and if one big customer steps away or one big investor steps away, they really suffer. So, so working for the startups gave me a great experience on how to manage in crisis, because literally we'd get a call from one customer and they said, "Oh, our customer that was 60% of the business is terminating the contract." And we scrambled to deal with that. And at one point, I was actually at a CFO of a startup, and we were doing pretty well. We had grown, and our CEO unexpectedly had a stroke and was unavailable. So, and that's a crisis, right? And I had to step in and figure out how to keep the morale up, keep the business running, and keep us steady going forward for the next year and a half. So. Fortunately or unfortunately, I've had a lot of experience with crisis, and you build certain skill sets and a certain attitude. Not that you have all the answers, and part of it is knowing that you don't have the answers, but there's you get comfortable with being uncomfortable and work through it. And one of the advantages I think Silicon Valley had, which is why I made so many successful startups came out here, because we had this attitude that failure was okay as long as you learned from it and moved on. So I think that's a really important mindset to have. It's failure is not having a bad thing happen to you. Failure is not responding to it well. So just because a bad thing happened doesn't mean that's bad. It's how do we react to it? How do we get out of it? And that's probably what people can focus on. And almost all of us went through 9/11. That was a crisis. It hit some people much harder than others. So I think we have a well of resiliency to draw upon, and just maybe tapping into it.